Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 17th of November, 2021. Thanks for joining me this morning. This is episode number 2118. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. As you can hear, tons and tons and tons of talking over the news feed. We've got several Fed speakers, ECB schnabels releasing comments. We just have a lot going on today in terms of official speakers on the calendar. So we're looking for Fed's Williams here shortly. The big news is, of course, who is going to be the next Fed chair. There's also a lot of overhang and headline risk coming from Washington as we head into December. We've got the U.S. budget expiring and the debt ceiling needing to be figured out. There's going to be a lot of political jockeying as a result of that, and the markets are likely to respond. Inflation is really the key thing today. This morning, the Great Britain released its inflation rate year on year, came in at 4.2% versus the expected or consensus 3.9. As a reminder, that's about twice the target rate for the Bank of England. And then out of the EU, the inflation rate came in at 4.1% in line. Housing starts in the U.S. came in slightly softer than expected, 1.52 million units versus 1.576. Building permits came in a little stronger, 1.65 million versus 1.638 million. So again, for the rest of the day, it's just a whole bunch of Fed speakers, ECB's Schnabel, Fed's Williams. We do get crude oil inventories today, Fed's Bowman, Bundesbank's Bach, and Fed's Mester, Fed's Daly, Fed's Waller, ECB's President Lagarde, Fed's Evans, Fed's Bostic, and RBA's Richards. So all the Fed speakers are out today and pushing. Sound is low, you say. Let me double check that just to make sure it is me, not you. There we go. This is where it should be. If it sounds low, turn up the volume. Okay, so as you can see here, market posture is mixed. S&P down 9 basis points, 9 basis points, 10 basis points. The Dow down 16. NASDAQ holding its own, sitting around settlement unchanged pretty much for the session. Russell is down 43 basis points. Europe is slightly up, and crude oil is down. Again, we talked about crude oil being likely to get soft here and start heading towards 72 is the expectation, and that's where we are. Metals continuing to push higher, although they've come off of where we were yesterday. They settled lower yesterday. And we're pushing a little bit up, and we're seeing crypto also hanging out at near the last pullback range. The S&P, as far as key earnings, Target came out this morning. This is a major retailer. Target had $25.65 billion in revenue in Q3 and beat its earnings per share by 7.07%. Lowe's, which is a hardware retailer, $22.9 billion, also coming in pretty strong, 16% surprise to the upside on earnings. And then we're expecting NVIDIA and Cisco. NVIDIA is part of the Fangman stocks, the big tech stocks in the NASDAQ. So that's one that the market is likely to pay attention to, expecting $1.10 in earnings. Cisco Systems also comes out after the close, expecting 80 cents per share in earnings. The S&P, looking at the S&P, we're looking at a relatively light volume morning here as the S&P has drifted down and sideways from yesterday's settlement. The overnight inventory is 52% below the settlement, so 52% short. The range is relatively small, 12.5 points. The point of control is at 46.95.50. The S&P, again, in complete balance here as we come into the session. Yesterday, in our review segment, if you recall, from the Trader Bite yesterday morning, the primary scenario is a test up and a drop. The secondary scenario was a small pullback, was looking for a test of 70, potentially 67, and then a push into 4,700, which is what we ended up doing. So yesterday we had a very short period of consolidation. We had an open auction, and then it immediately went bid in what looked like a drive. We drove up 16 points without a single 11-tick pullback. Statistically speaking, the rotation pullback value is 11 ticks currently. It has dropped dramatically. Rotations have dropped from week to week to week dramatically, actually. It was just 2 weeks ago we were around 17 ticks in terms of the zigzag pullback, or 5.5 points in a normal rotation. And now a rotation in the it was actually 6.5 points. Now it's at 5 points in the S&P, is what's considered a 1 standard deviation harmonic rotation. It's very important for setting stops and stuff. So we push up, we push through the prior high. I did find a long in here early on that I narrated in Convergent Trading's Head Trader channel at 89.50. Was looking for a break through the prior high, which is 92.75. Look for a scale at 92.50. I think it was 89.25 actually. And then we pushed through, which made it so that I was looking for the high, the overnight high of the prior session, 97.50, and I was looking for 4,700 and a runner to 47.11. Unfortunately, we had a sweep down, which brought the market right back into entry, and it looked like a news-based event. I think it was a 1,200 lot sweep that skipped through, and then I sat through expecting that we are likely to retest the high and break lower, which we retested the high by 3 ticks, broke lower, and held the mid before rallying, before this big rally. The thing is, we talked about this in our Trade Talk. If you're a Convergent member, I urge you to listen and watch yesterday's Trade Talk session. It's 45 minutes with Tendex and I, and we talked about this. The setups lately have been very algorithmic or jerky. The market is having a tendency to reprice very quickly and then go sideways. For example, we have about an 18-point impulse here. It's very important to see an impulse like this. Normally, I mark these with an error in my scenarios. We have an 18-point impulse, and look at how poor the pullback is. It impulses, and then everybody just stops before the next leg. This is an important setup for me. I'm looking for it to pull back reasonably. We did have the IB high and these multiple tops here to lean against, so I was looking for a long around 96 to 94, and I was happy for it to drop even to 92.50 in that trade and take some heat, looking for a continuation higher, because the goal on this long would have been 47.1175, the all-time high. We stopped 2 points below the all-time high, and we held this distribution for the rest of the session. We ultimately, finally, came back into the close, down into the 95.50, but there was nothing to do at that point. There were 2 trades on the close, 2 setups on the close yesterday, either because of the lower high at 47.05, as you see there. This is the high I'm talking about. The lower high, we were looking for a break of 4,700 a push into 4,700 to bounce off of 97, pull back to 4,700, 99, 4,700, looking for a short into 95. So we're looking for 5 points to scale out and a potential to come down into the full session mid and the high volume node of the lower distribution, giving us 46.90. So we're looking for 10 points on the close. The secondary play is the one I talked about earlier, a pullback into 95.96 with heat down into 92, looking for a rotation back and a push into the close, a push higher into the close. And neither one of those really played out into the close. The close was very, very boring yesterday. Good delta and rotations. Look at the rotations up. The white rotations far exceeded the negative rotations, the down rotations yesterday. The market was fairly bullish, but I found it very difficult to assess and hang on to trades. Here's what's happened since then. A very normally distributed profile here, and we basically opened. We tested down. This is, if you remember, I talked about 46.90 being the target to the downside just now. That is the high volume node right here, and the mid of the full session from yesterday. But that the mid doesn't matter in today's session. The mid goes away with yesterday's session. But the high distribution of the most accepted price, the high volume node, or the most accepted price in the lower distribution with the line in the sand, the cutoff line from yesterday, is at 95. So yesterday's profile is a clear double distribution profile, my favorite, because with a double distribution profile, you get a very clear risk reward scenario. You get a division of the profile. Let me just clear my. A very clear division of the profile, very clear attack on that low volume node, and a clear target to the upside or the downside on the double distribution. Once it clears the low volume node, the expectation is it goes back to balance, and the balance will be at the high volume node down below. And in this case, that was, as I said, 90.50 or so. And that's basically what we tagged to the tick here in the overnight session. Once that was done, we pushed through the LVN right there. You see the bars kind of stalling. Then they finally push through and they almost get to the prior day's point of control. So we're looking for 47.0250, and it went to 47.01, seemed weak, and it fell right back into the lower distribution. So we are in the lower distribution with the point of control at 46.9550. The price I've talked about yesterday for that setup, and the kilo volume node for today. This is how profiling works. It shows you what's going on in the auction inside of the bar. Inside of the bar, a bar chart, a Heiken Ashi or whatever doesn't show you that. There's nothing wrong with those kinds of bars. But looking at the price action alone, I think you get just a portion of the story. The profile shows you where the aggression happened. So that's what I wanted to show you. The other thing is, if you look at, let me show you an order flow chart here just to tie it in. This is my ES order flow chart. It shows a footprint. But what I want to show you is you can see that, you know, we're putting in lower highs, lower lows, inside bar, inside bar, inside bar, inside bar, and then we're taking out the high. So every price action trader here is looking at this and saying, oh, we're breaking. We've got this triangle, and we're breaking to the upside, which is true. But let's get rid of this. But the issue with this is that without looking at where the volume is and how it has dried up, there's no dry up here. See those little dots, the not little, but they're big dots, those red dots. Those are outlining sizes of 100 lots or more. And look at how aggressively This was traded down here. This is a weak bar here. Do not be surprised if we spill over and start looking to push to the downside. And you notice those bars are mainly red, or those dots are mainly red. There's some blue in here, but they're mainly red. The aggression is on the sell side, even though it's breaking to the upside on this inside bar. To me, this still remains a bearish setup. So you got to look, the dots represent volume. You got to look at where the volume occurred. You got to look at the profile and how it has tapered here, and what's going on. We have a nice little ledge here. This is a weak low in this area. This low is likely to be tested at 46.90, and we'll be looking for that this morning. An overview, we are nicely clearing, trending up in the S&P, clearing away from the full session VWAP. The full session VWAP moved from 46.54.55 to 46.61. We're doing good with these, with prices being tested higher and accepted, but the Dow is showing a fair amount of weakness, and you can see the S&P has already challenged that prior high. The Dow's not able to do that, nor can the NQ. The S&P is kind of getting ahead of the other indices on a relative basis, with the Russell completely imbalanced over the last couple of days. The Russell's just chopping around its VWAP for some time. So just know what the big picture is. Of course, I'm not trading the S&P using the NQ chart or the Dow using the ES chart. I'm trading the product itself, but pay attention to what's happened since the beginning of the month. I hate to place a time-based reference, but for now, this is what I'd like to use just to see how we've been doing in terms of the auction from the beginning of the month. So I use a monthly VWAP, and it it's tracking this price tick by tick. So it's giving me an idea of what we're looking at. So back to the review segment here. Clear weakness from yesterday's trading, but overall we have not given up much territory. We did not go down and take out the 46.67 double bottom there. The double TPO low remains in place here. This is on my radar. You can see that the market tapered and it fell off all of a sudden, as opposed to giving us a nice thin dry up on the low that day. So this becomes a key target for me if we sell off. And so I'm paying attention to where this is. We did open at 76 yesterday, and we could not. The best we can do is 3 ticks down before we rallied. I am not going to try to predict what the open is going to look like today. I feel like we are so close to all-time highs. Pretty much anything can happen. I'm favoring the long side here, given that we have put in a higher low yesterday versus the prior session, and we've expanded the range upwards. We have a nice double distribution, so I'm expecting pretty clear and decent opportunities today, but no idea what this looks like on the open. It looks weak. Yesterday looked weak. Yesterday, this whole thing looked relatively weak. It looked like it was likely to challenge the overnight low, and it did not. It opened and immediately went off. So this is where it stands as we come in. Let's take a look at what's expected for today, but I want to remind you all that tomorrow, 1 p.m., we're doing a public webinar with Convergent Trading, where I'll be talking about the key pieces that you need to put together to trade as a professional, to sustainably trade. It's not as sexy as Wall Street bets. Go ahead and buy option leaps and YOLO 20 grand to make $1 million or go bust. That's not a sustainable plan. We're going to talk about really what you need, the pieces that you need to have in place as a minimum in order to do this for a long time. I've been doing this for 21 years and strictly professionally, not in another context. So the way to sign up is to go to ft71.com/trade-like-8 AA-Pro. I'm going to post that here in the chat for you. Forgot to do that this morning. Again, that is for 1 p.m. Eastern tomorrow. Be sure to sign up. Let's move on. We're looking at what's expected for today here. I'm going to keep this very simple because it is really hard today to predict what it's likely to do. Again, I'm favoring the long side. Still, the fact is we are back here near all-time highs. The expectation this morning, the overnight inventory is 54% short or so. That hasn't really informed very well what the first move is likely to be, but I'm expecting this to be a choppy open. I'm looking for this to pull back to the 90 as I just discussed, looking for the 90, but eventually we're likely to impulse into yesterday's settlement price. Yesterday's settle is 46.96 even. Looking for the 96 to be tested here for the settlement stat. And then from there, it is a push of 4,700, pull back, consolidate, and I am looking for all-time highs. We are within just 2 or 3 rotations, standard rotations from the all-time high from where we are now. We've come all this way. I expect the market to challenge that all-time high. The secondary scenario is a test of the open, push up immediately to 47.01, consolidate, come back below the 4,700, consolidate here around settle. Yesterday, fill in this low volume zone as we often see it do. Fill in, attempt to test, consolidate, and then eventually start to push higher into the close. That's the second scenario. There is a third scenario. The third scenario is failure on both of those. The third scenario is an open that tests higher, impulses down into 46.90, and then starts to squeeze. And then the target for this is going to be none other than the double bottom at 67. So we're looking for it to check the entire range of yesterday and then squeeze into the 67 double bottom. That becomes the key target. This, of course, not that I'm a perma bear, but this, of course, is the scenario that is likely to provide the most opportunity and volatility, and then ultimately settle back at the MC point of control. That's scenario 3. This is failure by buyers to maintain and hold prices and squeeze shorts into the all-time high. That's what that is. Good luck today, and I'll catch you tomorrow morning. Take care.